She's an associate professor of economics at the State University of New York at New Paltz. Sarah, what do you think prompted all of this to happen?
Well, I don't really know. I think that, the market slide really reflected the fact that it was a surprise to everybody. We had been told through the media by Secretary Mnuchin that everything seemed to be going well and there seemed to be some sort of deal in the works. But it turns out that sorry, it really wasn't the case. So we don't exactly know what prompted it, but it seems likely that the deal wasn't exactly to the president's liking. Certainly, some of the requirements were that China would have to distinctly change the nature of its economy by eliminating subsidies and so on. And I think that that type of thing would be a real sticking point for China.
Well, we know two things. China's got to deal with Trump's tweets, and you've got to deal with the cat. It's easier to deal with the cat, we've learned. Markets did not like this tweet, as you pointed out. Wall Street down dramatically early on. As a negotiating tactic, this has the potential to backfire on Trump, doesn't it?
Yeah, I mean, it's not really the type of negotiating tactic that a lot of policymakers would want to start with because it's such a power play. And, if things don't work out by Friday, which is only a few days away, then, we're going to see major changes. Tariffs imposed U.S. probably, retaliative tariffs imposed by China. And so that's really going to change the nature of talks. It seems likely that talks would break down after that point.
Let's talk about the effects of this trade war, because there's a new study out by a distinguished group, a team from Princeton University, the Federal Reserve Bank, and also Columbia University. And here's what they learned. They've determined that import tariffs through November of 2018 cost U.S. importers and consumers $12.3 billion in added tax costs, $6.9 billion from reduced imports that otherwise would have been purchased at a much lower price without the tariffs in place. So talk to me about the damage from this.
There's a lot of damage. And I've also done some research on this myself recently and have found that it's also affected U.S. multinationals who are in China. It's affected them in terms of exporting their goods back to the U.S. So that was sort of an unforeseen consequence of these tariffs. And it's also impacted sales of goods to China as the trade war has caused an economic slowdown in China or has further exacerbated it. And then there are also additional costs that maybe haven't necessarily been taken into account yet, and those are the costs to firms due to stock market changes in their stock prices. And I estimate that the changes in stock prices have accounted for losses to many companies of over $100 billion. And so those sort of impacts might be even much greater than what has already been assessed.
Well, why is it there's so much focus on the tweets and not on that piece of information? Because it's critically important. And if I'm a soybean farmer in Iowa and suddenly China's buying from Brazil, chances are they may not come back.
That's right. I mean, I think that this trade war is going to have a lasting impact on exporters to China. And China is looking for other avenues for importing goods, in terms of automobiles, in terms of the soybeans, as you mentioned, and other agricultural products. And so this is going to permanently change the nature of U.S. trade with China, even if things get back on track after the whole trade war is over.
Sarah, our thanks to you and our apologies to your pet. Appreciate it.
Thanks.